Bienvenidos a este segundo episodio de Oportunidades en Grecia, podcast que desarrollamos con la intención de que la empresa española conozca las oportunidades de negocio en el marco de la internacionalización que podría encontrar en Grecia, en el marco de la exportación de productos y servicios, en el marco de la inversión. Hoy tenemos la suerte de hablar con Ilias Leko, que es economista jefe del Banco Pireo, banco sistémico griego, que nos va a hablar fundamentalmente de la situación económica, del potencial de inversión en el país y de otros muchos temas de muchísimo interés. Pasamos al inglés, que es el idioma en el que vamos a mantener la conversación. So, I was mentioning that this is the second episode of Oportunidades en Grecia podcast, which we recently started. And today we have a great and very interesting person invited to the podcast, Ilias Leko. Ilias, welcome. Thank you for coming.
Thank you very much for having me here.
Ilias is a chief economist at Piraeus Bank, which is one of the four systemic banks in Greece. He leads a unit that reports on development in Greece and the global economy with a specific expertise in Southeast Europe, with a long-lasting career in finance and economics. Previously worked, of course, long career in Piraeus Bank, and previously worked on issues dealing with foreign exchange and interest rates, modeling, let's say, also within the financial system in some rating agencies such as Standard & Poor's and Moody's, which is also great because at some point in the conversation we'll talk about ratings. He is a PhD in finance from the University of Lancaster, and I think we'll have a great conversation with him regarding many issues that are of paramount interest to Spanish potential investors in Greece. I would start asking you about the economic situation in Greece and the forecast. We hear a lot of very appealing and interesting numbers when it comes to GDP, 2021, 2022, 2023. What could you tell us? Could you elaborate a little bit more on GDP, inflation, employment, and maybe even about on the current account of the country?
Yeah, thank you very much both for having me here and for this very interesting introductory question. I think that the Greek economy right now, it is at the beginning of a virtuous cycle. Everybody knows that Greece had a long period of a recession, starting with the Greek recession that lasted for 6 or 7 years, and then on top of that we had the recession created by the COVID pandemic. So everybody was really cautious regarding the prospects of the Greek economy. Nevertheless, during the pandemic, we have seen the creation of very positive long-term structural factors that will help the Greek economy going forward. As a result of these factors, and I'm happy to elaborate on these if you want, we see that Greece is beginning to grow at a much faster pace vis-à-vis the pre-pandemic period. So for 2021, we expect growth rates of 10%. That might sound a lot, but recently everybody, including the European Commission and various rating agencies, they have been in the process of upgrading their forecast for the Greek economy. Just to give you an idea, the 9-month average that we already know is at 9.5%. So that sets the floor of growth for 2021. So overall, I think that growth for 2021 will be close to 10%, and there are upside risks around this forecast. For 2022, we see growth close to 5.5%, and from 2023 onwards, we see growth stabilizing at growth rates around 3.5%. So overall, we have a very positive outlook for the Greek economy. As far as inflation, which is a very catchy, very sort of a hot topic right now, not only for Greece but across the world, inflation in 2021 was at 1.2%, so nothing extremely difficult for the Greek economy, but what we see is that inflation has picked up substantially over the past 3 months or so. So for 2022, we see inflation between 3.5% to 4%. Most likely it's going to be closer to 4%. And then we see inflation declining to below 2% for 2023.
I see. It sounds like quite positive approach to both variables, GDP and inflation. And as you mentioned, your forecast is not far from, I would say, the market consensus, European Commission forecast, and other actors. What about the other variables? Is there anything you would like to, any message regarding or any interpretation of the evolution of the of employment and the current account?
Again,
maybe elaborate on.
In line with GDP growth, we see a substantial improvement in the labor market. Unemployment in Greece right now stands at 13.3%, which is a lot when you compare it with European standards. But for Greece, you have to remind that we come from unemployment rates of 27% a few years ago. So there has been a huge decline in unemployment. And I'm happy to say that this trend of declining unemployment did not stop during the pandemic years. So that is a very positive factor. Another very positive development for the Greek labor market is that unemployment is declining, while at the same time we see the labor force expanding. We see the non-active part of the population declining. So unemployment is declining when labor force is increasing. So people who have been discouraged, especially young people and women who have dropped out of the labor force during the Greek crisis years, they are returning to the labor market. They see that there are employment opportunities, and despite the widening of the labor force, unemployment is declining. So these are very sort of positive and robust messages regarding the future of the Greek economy.
Yeah, I think that's it's very interesting that you interpreted the way you did the labor market, because it's important to bear in mind that effectively, as you said, during the pandemic, the rate of unemployment went down during the pandemic, and the base of labor has increased. Moving on to a little bit to see what is your opinion on budgetary issues. There again, when we read documents, published reports from the European Commission, I think mostly what we see is a very positive lecture or reading of what's happening with the fiscal deficit or the public debt. What is your take on those? What do you think about the evolution of the fiscal deficit, income, expenditure? What do you think about public debt? We had, I think, there was a very good result in the last issue of public debt a couple of weeks ago, I think. What would be your opinion on these topics?
Yeah, I mean, the public debt is one of the main kind of topics of contention because it's very high. And during the pandemic years, it increased substantially. It went pre-pandemic, and 2019, debt to GDP stood at 185%, and it increased to 205% and 2020. This spike in the debt to GDP figure came not because of the deficit, but because of the decline in the denominator. We lost about 20 billion of GDP during 2020, which was, of course, pretty much in line with what happened globally. But because we expect 2 years of strong growth, 2021 and 2022, we see the debt to GDP coming back to 180% at the end of this year. So overall, the trajectory is very positive. And because as we speak, we see an increase in government bond rates across Europe, in Greece, in Spain, in Portugal, people have to keep in mind that close to 95% of the Greek debt is fixed rate. And it has been fixed at very low, below 1% average interest rate. So despite the fact that nobody is happy to see sort of government bond yields sort of going up, you have to keep in mind that this does not affect the servicing of the Greek debt.
Very interesting. So also a positive approach to the, let's say, fiscal policy.
And just to give you to make a comment about the deficit as well, because that is very important. I mean, the Greek government ran deficits around 7% of GDP for 2020 and 2021. But I think it's very important that this year we're gonna reduce that to 1% deficit. And I think it's very crucial for the Greek government to give a very positive signal by moving to primary surplus next year. I think that the target of having 1.5% to 2% primary surpluses in the 2023 budget is of key importance.
Very interesting. Let's go now, Ilias, if we may, to the supply side of the economy. What would be your opinion, your take on the latest enhanced supervision reports that I think they assess positively, very positively, the evolution of the Greek economy. Your assessment about the end of the supervision, the enhanced supervision, and so on and so forth, and about the structural reforms. How do you see those?
Yeah, I mean, again, I would start that sometimes when you do the structural reforms, you don't see the immediate benefit. So we discussed just now the improvement in the labor force, in the labor market, and the fact that we see people returning into the labor market. I think it's very important to understand that this is a result of reforms that have taken place back in 2010. At the beginning of when the Troika arrived in Greece, one of their first demand was to liberalize and make the labor market more flexible, both when you fire but also when you hire workers. And the positive impact of these reforms 10 years ago are being felt today. So in that respect, I think it's very important to continue the reform process. Both this government but also previous governments have made it very flexible to start new businesses. And also, one thing that may not be in many people's radar is that as a result of these reforms, we see the beginning of a new tech startup scene in Greece. We see a lot of fintech companies, but also sort of companies that develop new technologies in Greece, gaining momentum. And I'm sure that you have noticed that a lot of these companies are being taken over by well-established global firms like Microsoft, Facebook recently. So all these, Cisco, they come here and they buy Greek tech startups, something that would seem kind of impossible or a dream 5 or 10 years ago.
That part is very interesting. We'll get back to that if we may a little bit later about big investors investing in high tech or startup companies in Greece. I want to ask you a little bit about the financial system because for some time the NPLs were a topic. How do you see the situation nowadays when it comes to those and the financial system, generally speaking?
Again, I think that the situation regarding the financial system, it started quietly to improve a few years ago. So I think that the beginning of the improvement was back in 2017. The first thing that we saw improving was the liquidity side. So we saw that there was a renewed confidence in the Greek banking sector. Deposits were being sort of coming back into the Greek system. Greeks stopped keeping their money in their safety box or in accounts abroad, and they began to sort of bring their money back into the Greek banking sector. So that was the first sign of improvement. At the same time, Greek banks raised new capital. So either by selling subsidiaries or by issuing new equity. So the second was the improvement of the capital base of the Greek banks. And last, but not least, has been the decline in non-performing loans. We started with an NPL ratio of 50%, so half the loans in the Greek banking sector was in a non-performing status. This ratio, as we speak, is 15%, and everybody is aiming for a single-digit NPL ratio by the middle of this year or end of this year. So the improvement has been substantial on all three fronts: liquidity, equity, and non-performing loans. The key challenge looking forward is now to see to move back into credit growth. All that GDP growth, all that investment that we foresee coming into the Greek economy would have to be financed. And I think that for the first time, Greek banks are here to help both Greek companies, but also foreign companies who want to have a look at opportunities in the Greek economy.
That's of course good news for those Spanish companies that might be willing to invest in the near future in different projects in Greece, in different sectors that we think are of real and that have potential interest for them. There's a question I would like to ask you, which is always a reference for investors, which is the investment grade, and the impact on FDI. And here, since you have a big background working with rating agencies, and of course you have contact with them, I understand. How do you assess? When could we think that investment grade will appear? How do rating agencies look at Greece at this moment?
Yeah, I think that one key feature of the rating process that has been documented both from the academic side but also from a practitioner's point of view is that the rating agencies are always lagging indicators. They always come and stamp with their sort of seal of approval developments and positive decisions that already have materialized. They are never leading indicators. Usually the financial markets are leading indicators because they are the first who are going to discount positive events in the future. And also we really need to keep in mind that Greece had a very volatile economic situation in the recent past. Okay, so we shouldn't forget what has happened in the recent past. So all that framework makes the rating agencies sort of very slow moving. But overall, I think that at least two of the three out of the three major rating agencies are going to upgrade by one notch Greece this year, and by another one next year, which means that by middle of or end of 2023, Greece will have reached investment grade status. But as I say, when we look at the pricing of Greece CDSs or Greek government bonds, you see that the pricing in the market is very close, or it's above investment grade level. So the market, by and large, has already discounted that. We simply lack this seal of approval that will come when sort of the established rating agencies sort of confirm that Greece has reached again investment grade status.
Well, precisely, my next question or comment was about how can you do the matchup between the evolution of the investment grade that I think you portrayed very well, difference between the way or the speed at which the market discounts things, and then how the rating agencies work, and how does that match with, as I think you mentioned, some very big companies that I think read usually in a very efficient way the markets. How does that match with those big investments of, let's say, the Pfizer's, JP Morgan, Chase, Microsoft in the country? I mean, these companies have come to the country lately, 2021. How does that? I guess it makes sense with your speech, in the sense that maybe they are ahead of the way rating agencies work.
Yeah, I mean, definitely. Greece was always an attractive case in principle or in theory, because it had a well-educated sort of working force. Everybody more or less speaks English. The environment here is very attractive, but either there were structural factors preventing large companies moving into Greece, or in recent times there was a huge sovereign risk premium that made most companies or institutional investors to avoid Greece. I think that has been quietly, as I said, fading away, and we have seen recently, as you said, very big sort of global names coming to Greece to establish operations. Again, it's the likes of Cisco, Pfizer, Microsoft, but also smaller companies. They come here to invest in logistics, in renewables. So there is a plethora of sectors that foreign companies look at, and they're already investing.
Yes. In the Economic and Commercial Office, we think there are many sectors with a lot of potential of the likes, as some of them you mentioned them, of transport infrastructures, renewables, tourism, waste treatment. I mean, you name it. There are big opportunities, we think. Let's talk about a topic that I think we have discussed previously with previous conversations. The recovery and the RRF, the Recovery and Resilience Fund, Greece 2.0. What is, from your perspective, going to be the effect, the impact of the recovery fund in the Greek economy?
Yeah, I think that that is a game changer for Greece. As I said at the beginning of our discussion, when the pandemic appeared, and when we realized the impact that the pandemic was going to have on the European and on the global economy, we as Greek economists, we were really scared, because Greece was getting into this new phase of a recession, having lost already 10 years of economic growth. But I think that the introduction of RRF, I think, is going to turn out to be a key game changer for the Greek economy going forward. As I said, my forecast for 2023 onwards regarding GDP is close to 3.5%. I think that is a new trend that will be sort of driven by the RRF funds. A key difference between RRF in Greece and RRF for the rest of the European Union or the rest of the European area is that for Greece, RRF is 20% of GDP. That makes RRF structural, not cyclical. If it was cyclical, it would boost growth for 2 or 3 years and then it will fade out. But for Greece, the 32 billion, which is the size of RRF for Greece, or the Greece 0.2, which is the Greek government's intention to leverage these 32 billion with another 30 billion of private sector funds, this will allow Greece to continue growing at 3.5% for at least 5 to 7 years into the future, vis-a-vis the 1.5 to 2% that was the pre-pandemic trend for the Greek economy. So RRF will boost Greek GDP by 1.5 to 2% per annum for the next 5 to 7 years, according to our models.
There's also something that I hear from time to time, which is that the investment, you mentioned it as well, the investment rate was not very high for a long period of time, not enough to cover the status of the investment stock, which means that probably now the productivity of investments should be higher than the average, right? I think we've discussed some of the main issues regarding the Greek economy and why those make at this very moment the country be in a position of offering, I think, for the Spanish companies some very nice opportunities in different sectors for further investment. Ilias, I thank you very much for joining us today here. Thanks a lot.
Thank you very much for having me.
As I said, I take many of the comments that Ilias made. Very interesting, the forecast for GDP growth that goes even beyond of the I would say most positive expectations, which are, I would say, for 2021 already close to 7-8%, but I think you mentioned 10% maybe. Inflation in the range of 3.5, maybe 4 for this year. Positive reading of the labor market, and a positive reading as well of fiscal issues, budget, public debt, supply side of the economy. I think you told us very in a way that we could understand very well the way the financial system has evolved along these last few years. Looking forward to see 1-digit NPL ratio for the end of the year in the systemic banks. And you explained us very well what would be a reasonable or rational expectations for the investment grade, and why that, how does that match with very safe investors already investing in Greece of the sorts of the ones that we mentioned in the conversation. With regards to the RRF, I think it's, as you said, a great pillar for growth, and most probably, as you said, is structural rather than just cyclical. Up to here, we finish here this episode of our podcast, Oportunidades en Grecia. If you want to follow, there is more in www.icex.es. Despido aquí el segundo podcast, Oportunidades en Grecia. Si queréis conocer más sobre el país, tenéis toda la información en www.icex.es.